Believe me, I understand. This stock market correction is not fun. And every blogger or YouTuber out there just telling you to go out and buy the dip recklessly is kind of getting old. I have hundreds of clients in their retirement age stage of life who are living off of investments alone, and so this is an extra scary time for them. They're not in that stage where they just have extra money to throw into the dip and get to wait another 10 years. So by just saying, hey, go buy the dip and wait 5 years, that's not really understanding of everyone's situation. If you're close to or in that stage, I empathize with you, and I definitely want to give you some hope through this video. Those of you not in retirement or even close, this is still going to be one of the most important videos that you'll watch all year. The Fear and Greed Index measures investor sentiment, and it's the lowest I've seen at extreme fear, so you're not alone. While I do believe that we're gonna make it out of this and be totally okay, there are some things that you should be doing right now and through this time that's gonna set you up for extra success. I'm also gonna give you some ways that's actually proven to help cope with anxiety and fear during this time, and even that minor depression that you're probably feeling with seeing your portfolio down so much. It's definitely not fun to see your hard-earned money seemingly just disappear after a couple of days. I agree with you that this time does seem a little different than other market dips in history, so let me ease some of your tension with my research. My name is Nolan Govea, my students call me Professor G, and I made this channel to make investing simplified. Over the past couple of days specifically, but also over the last couple of weeks, the whole stock market has just been dropping. This year to date, the S&P 500 is down over 15%, the NASDAQ 100 is down even worse at negative 18.5%. The whole Magnificent Seven have absolutely flipped and are down so bad. These percentages on the screen are how bad they're down from their all-time highs, and it's shocking. Remember though, we just came off of 2 absolutely amazing years, and I've been telling people since the end of last year that we can't keep up at this pace. In 2023, it returned over 24%, and then the very next year it returned another 23%. A market correction of 10 to 15% is normal and occurs once every 2.5 to 5 years. It's been a little over 2 years since we've had a big enough correction, and so we're right in line with the market cooling off a bit. Yes, the S&P 500 is down bad this year, but zoom out a bit and let's actually look at this. This humongous dip that we're all losing our minds over is really just a blip on this 5-year chart. It just puts us back in line with prices that we saw 10 months ago. Here's the bottom line. We've had much worse drops and dips than this in the past, and they've lasted much longer. And we've made it out on the other side and even excelled afterward. We saw a 34% drop in the COVID-19 crash. We saw a 29% drop in the Black Monday drop. We saw a 57% decline in the global financial crisis. We saw a 49% drop in the dot-com bubble, 48% drop in the Nixon shock, and an 86% drop in the Great Crash or Black Tuesday. But look at the historical chart of the S&P 500. If you really look close, you can see some dips, but in general, that thing is up and to the right. At the end of last year, I definitely started warning you all, and for sure started having heart-to-hearts with my private community over on Patreon, explaining that this just can't keep going up. What goes up has to come down, at least for a portion of time. My latest video that explains the most optimal portfolio for literally anyone, and specifically by age as to how much you should invest in each category, one huge point I made throughout was that if you need money in the near future, you need to set a portion of your portfolio or a portion of your net worth in cash or outside of the stock market, just in case we see a dip like we're seeing right now. My reasoning for that is we just don't know when a dip is going to happen or how bad it's going to be, and if you need that money in the next couple of months or even within the next year, and you have to sell out of your investments and the investments are down, that means that you will lose money. For those of you that don't need the money right now, you have a savings filled up, or you have a job that brings in a very consistent income and you're not worried about your living expenses day to day for the foreseeable future, you're in a different category. The first thing though that you need to do is just take a step back and breathe. Turn off the news, Stop looking at the stock market every 30 minutes. Run this checklist. Do I need the money sitting in my investing accounts to live my daily life right now? Do I have a job that brings in money to sustain myself? Do I have a sizable emergency fund that can last me at least a year of living expenses? If you answer all of these, then you can see that your immediate needs are covered. If, though, you answer these questions and you see that you do actually need to take some money out of your investing accounts to sustain yourself in the very near future, or if you're retired and that's been the plan all along, then you do need to take some very specific action today. You have a couple of options. The first one is going to be to figure out how you can just make a little extra money just to make it through this time. It's not favorable, but it's just the truth in this situation. If truly the only options that you have are that you take money out of these investments while the investments are down, or you go out and make a little bit of extra money with a part-time job or a side hustle, or somehow just bringing in enough to meet your living expenses for the next couple of months, it's definitely going to be more favorable for you to do that one. Remember, this is only going to be for a season. One of my favorite tools is here on investing.com called Warren AI, where you can ask it questions for investing. How long does the typical bear market last? Bear markets typically last 9 to 16 months with an average duration of about 13 months. However, each bear market has its own unique characteristics influenced by economic conditions, monetary policy, and market sentiment. Looking at historical data since 1950, the S&P 500 has experienced 11 bear markets with durations ranging from as short as 3 months to as long as 31 months. The average decline during these periods has been approximately 30 to 35%. The current market situation appears concerning, with the Nasdaq having officially entered bear market territory after falling 20% from its February 2025 highs, as reported on April 4th. So a couple of key things there are that a typical bear market lasts between 9 and 16 months, and that the average decline is around 30%, maybe even higher. So we're down bad right now, but not as bad as the average market decline over those 11 different times. And so we're down bad, but not as bad. And remember, there's been 11 different bear markets since 1950. Let me show you that S&P 500 chart again. Within there are many, many bear markets, and many of them worse than we're seeing right now, but overall the chart trends in the right direction over time. Now, what to do if you don't necessarily need the money right now, but you are experiencing some anxiety and some depression over seeing your hard-earned money or your investments drop so much over the past couple of weeks? Well, first, you're not alone. The fear and greed index is at extreme fear, and it's the lowest I've seen in quite some time. One major thing you can do is what I've tried to do already or start for you in this video, and that's to research the historical markets. By understanding how massive those dips truly were in the dot-com bubble or the financial global crisis, you can see that the stock market experienced things very similar to what we're seeing today, as far as very scary, the market dropping, but then we see the markets recover and recover with flying colors. So truly understanding past markets and history should help ease some of that anxiety and understand that markets do have dips. Crashes happen, corrections happen, and this is just all part of the investing market cycle. So for this step here, if you don't have any extra money to throw into the market and you're wondering if you should hold or you should sell or what you should do, at this point, again, if you don't have any money to put in there, it's just best to hold and ride it out. This graphic shows that if you just stay put for long term, the longer you hold, the more chance for positivity. In a typical 1-year period, 73% of the time the S&P 500 ends positive versus 27% of the time it's negative. In a 10-year period, however, the S&P 500 will end positive 94% of the time versus only 6% possibly negative in that period. The third thing that you can and should do if possible right now is to throw any money that you don't need liquid, that you don't need right now, into the market and dollar cost average over this period. Remember, safety is number one, so do not liquidate your emergency fund. Do not take out any margin or debt in order to invest. This is truly an opportunity to get in at much cheaper prices, and so if you feel comfortable and don't need the money for a long period of time, these are statistically the best times to buy. I'm buying as much as possible right now. Remember also that if you have a job and you're paying into a 401k or 403b, you are dollar cost averaging through this terrible market and getting very good prices. So don't be too concerned if you can't actually take money and put it into a brokerage account or IRA or anything right now on the side. As long as you have something like a 401k or 403b, something investing just in general in this market, you are dollar cost averaging and you are buying the dip. The next thing to do is probably going to help you out the most as far as psychologically, emotionally, all of these things. Get into a group that can keep you level-headed and has other investors or other people going through this exact same thing, but maybe has people that have been doing this for quite some time and are experts in the field, or maybe just have been doing it long enough that they can take you under their wing and help to make sure that you understand that it's going to be okay. My Patreon group's only $20 per month, which is a steal because we have so much knowledge in this group of over 300 members, and we have a mix of people who have been investing for 40 years with millions of dollars, and then people who just started investing this week. We meet on a live group Zoom twice per month, and I put up blogs and market updates exclusively to this group, only every day or two to keep them informed. To be in on the ground floor before I say anything about it here on YouTube, check out the link down in my description and join us over on Patreon. This too shall pass, and I am confident that the world is not ending, the stock market is not going to implode, everything's gonna be okay eventually. Do not make any crazy long-term decisions based on this short-term data and this short little drop that we're seeing right now. I understand that it is not favorable, it doesn't feel good, it actually feels quite bad. I understand that and I'm right there with you, but just weather the storm just like we have in the past and all those other things that I showed you in the charts. And I truly believe that the S&P 500 will come right back and everything will be okay. Those who took everything in this video seriously are the ones that are gonna make it out on top. Watch either of these videos to keep you going strong in your investing journey, and I hope to see you over on Patreon soon.